Hi, everyone. Thank you, Kevin. I hope you have a great week too. Hello, Brock, Ren, Sinatra. How's everyone doing? Okay, so another week of us doing all we can to help you succeed while we're attempting to succeed at the same time. Good morning, Arena, Hugo, Marco. Let's look at charts. Okay, Tomas, Paul Smith, how are you? Okay, I think this is a pretty important chart for precious metal traders here. Threatening a breakout of a little ascending triangle at 68.50 will get it done. I think it'll have legs if we get through here, and you could see it playing out in the precious metals today. For example, you have gold down 0.47% and holding up much better than silver, which is down 2%. They're both trying to come back. Have to say this about the dollar, and you guys know that I'm constructive for this bear market rally, but we keep pausing and unable to close over 92, which makes me skeptical of it. And I think that there's two scenarios. Either we're going to go to new lows here, or we could have like an ABC back to 91 or so. And that's going to be a pretty important area, 91 to 90.80. Everyone see that? So 92 keeps rejecting it, rejected it here, here, here. So we'll see 91.60 is important support. Um, it could be, Jay, that, maybe it's economic reasons. Hello, Paul. I'm not sure either. I just see the chart and I've been looking at this base for a while in the gold silver ratio. So yeah, I think we're going to break it eventually and head back down to 23 or so. Okay. Euro pounds trying to come out of the hole here. Okay. Well, we had this move last week, almost had a three drive here. I do believe that we're entering a stage where, and this is not just a comment on EG or directionality of the dollar, but you could see it today, and this hasn't happened in a while. For months and months and months, cable led the way on up days, held up better on down days, and that started shifting last week. So that means that if you want to be bullish a dollar, the pound's your preferred short. I think we're going to have some problems if we get up towards 139, 139.20. The big picture on the pound still looks like we could maybe pull back to this major breakout that we had at 35 and a half or so. So for, dollar longs, that's it. Okay. That's what makes a market. Canada had a good week, and we're starting off the week lower with the dollar. I think this low is going to hold. I'm just looking to see what happens maybe around 24 and a half. This is a pretty nice wedge. So we already had the throw over, and this may just be a pullback before we make another move to the upside. And then I was thinking about this and talking to some of my traders that I'm looking for 4,100 in the S&Ps and or the 4,080 level. So you take the high at 39.90 before we turn. Last week I said we could trade 38.80, got to 38.88. So you just tack on 100 points at new highs, and there we are at 40.90. Okay, so those are some of the things that I'm looking at here. US dollar yen, I know it's lower, but it's just really sideways. There's nothing that it's doing except maybe consolidating here for a while. So um, I'm thinking that there could be still another high left in US dollar yen, one more thrust. Maybe we pull back to 108 first, like Greg said last week when he dropped in on Friday. And the reason I'm saying that is although yields are easing a little bit here today, um, for example, on the 10-year, you still had a confirmed high up here. So actually, I don't think yields have peaked. I think we'll get another run up here. And I've had this speed line for a long time. Let me get the weekly. I drew it back here off these two highs. And look at where, look at where the confluence is on the weekly with the 200 week and the speed line coming up around, 197, 2%. Let's see if that's a magnet. Okay, well, you do trade in the after hours. No, that's not what it means. Okay, gold silver ratios like euro pound. It's not directional. It just tells you which one's going to outperform the other and gives you your preferred longs and shorts. You need some mentoring. If you think you're going to get it done just in face asking questions, let me ask you something, Jay. Have you joined our community? Because I would recommend it. That's my diagnosis. Just by your questions, that if you hung around with some veterans in our members chat, you would know these answers. Okay, well, uh, I think that if you're trading right now, you need to do it quickly before you get in trouble. Because this is what happens, guys. You either pay the market, okay, all right. You either pay the market, you pay to learn, or you pay the market. Sometimes people do both. But if you don't pay to learn with someone that has, qualifications and has been around for a long time to help you avoid the landmines, and you go live, you'll be back on demo again. So I encourage everyone on this Monday morning that if you say what one of our attendees is saying, that they're planning on doing it, man plans and God laughs. And if you need to know how to set up a 50 and 200 moving average, yeah. Okay. So you're not going to find a better team. All right. So you're not going to find more research. You're not going to find a better website, in my objective opinion, because I've been around. So who's going to take the step instead of thinking about it and join today? Give me a why. Anyone willing to invest in themselves? Okay, because I'll tell you something. If you're unwilling to pay anybody else, you're going to have a hard time getting paid yourself. Okay, so you're joining today. Welcome to our community, Jatin. All right. So I'm going to turn it over to Blake and see, what if he's getting the action he was looking for in his week ahead video. And when you're in members chat, you have access to Blake and Steve and the whole crew and Amanda and Paulie. So, this is something that I think that you try it for 90 days and tell me if I'm wrong. Okay. Hi, Blake. How are you today, buddy?
Hey, good morning, Dale. How are you doing?
Okay, I'm doing all right.
So you asked if I got some of the action from the week ahead video.
Yeah.
Really what happened over the weekend, which is a big deal, is regarding Turkey, where maybe Stelios or Steve, if they're listening in here, how do you say his name? Erdogan.
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 Yeah, he canned his finance minister, basically, right?
Mm-hmm.
I mean, he can't. I mean, it's like it would be the equivalent of like Biden, firing Jay Powell.
No, it isn't. The market won't care because Jay Powell is going to be replaced by somebody equivalent. And the problem of Turkey, though, the
But
problem
wait,
is that
Steve. But we know that Jay Powell is going to be removed at some point anyway. But it would be like abruptly, right?
still the market, I think, won't care only temporarily, because the big difference is the following. The market more or less knows that there is a continuity of monetary policy having to do with the US, good or bad. There is a lot of discussion that can be made, but there's continuity. On the other hand, the market knows the following. Erdogan was totally not in favor of the proper monetary policy to stop the massive multi-year landslide in which the lira had been. And finally, after a long period of time and a lot of punishment from the markets, the Erdogan decided that he needs to let the market, he needs to give the market what is required. So he put an actual Minister of Finance, and he let the central bank do what had to be done. In my opinion, what the problem is at the moment is that the market is afraid that means that Erdogan wants to go back to implementing his own monetary policy and his own financial policy, which we know how they've worked in the past. That's a big problem there. You know what I mean?
Got it. Okay. Well, let's just say then it would be, well, no, I don't know. Anyway, I get what you're saying. And you know what? The market does care, but the market is, you can see the US dollar has pulled back, against the lira. So the lira has bounced a little bit since the surprise removal over the weekend. But you look at the US dollar Turkish lira, that's a huge spike. I mean, that was near its all-time highs, if I'm not mistaken, right? I remember we looked at this cup and handle pattern. It played out for the most part. I mean, this measurement, this is all stuff that I've had drawn out for, the last year or whatever. And as we have come down, I kind of lost track of the US dollar, the lira. I hadn't been paying much attention to it. Other than playing the US dollar Mexican peso on the long side. So most people know that I'm long, well, at least in our community, know that I'm long the US dollar Mexican peso. I sold some at 21.40 on this rally, and I was picking up some at the end of this last week as we were near the support. So I was happy to see this happen, for the reason of just, the Mexican peso being under a little bit of pressure. But I'm wondering, do you think that this move is going to carry the US dollar Turkish lira up above new all-time highs? Because that was, I mean, this has been a hell of a rally.
It is, in my opinion, Blake, it is 100% up to what we get as a replacement. So if the replacement is one that doesn't disrupt the idea of the market that Erdogan learned his lesson and, he needs to have a proper monetary policy in order for things to work out, I think that the Turkish lira will be stabilized once again. If, on the other hand, we get a replacement that's going to be, in essence, fully controlled, like a straw man. That's the English expression, isn't it?
Strong man, yeah.
Straw man, straw. Αχυράνθρωπος, Στέλιο. Am I saying that correctly?
Straw man.
Yes, straw man, yes. So anyway, if the market believes that we're just going to get a straw man in his place, or somebody that Erdogan will be fully in control of, I think we can easily see new all-time highs in USD TRY.
All right. Well, we'll be watching it carefully, because I think this is it's affecting some of these other currencies as well. So
which I think it shouldn't, because these issues are really isolated, having to do with Turkey. You know what I mean? For example, nothing to do with other emerging markets. It's not a broad, issue affecting.
But at the same time, it's affecting Turkish, equity markets, which,
Oh, of course.
it could end up bleeding over from, asset managers in Europe that own different parts of, it could be part of the domino effect.
Yeah,
Um,
absolutely,
not
absolutely.
saying that
But
it's going to
what I
be.
mean is the following: is that if we see other emerging markets getting sold off because of all these correlations, I think it might be a good opportunity to buy some of them.
Got it. Okay.
Of the rest, I
Well,
mean, not
then
of
that
Turkey.
really that takes us into more of, how do you feel about equities, where they're at, and current valuations, and because that I think is going to be the bigger driver. So
Yeah, I
thank you.
think that emerging markets are still, some of them are still very, very, very nicely priced in comparison to developed economies, stock markets, especially given the fact that I believe that commodities have a lot further to rally.
Well, we'll see about that. All right. Well,
Yeah.
thanks for your input, Steve. I appreciate it. Really
Steve,
quick, what I
very
wanted to do
passionate.
is I want to take a little bit of a look at the euro dollar, because the euro is actually performing pretty well today, and it's one of those currencies that, as we were breaking lower late last week in this little flag pattern or pennant, we've bounced back. I'm not convinced that the euro is going higher. Matter of fact, I think the euro is going lower near term. I look at the dollar index, and most of you guys know that I'm looking for the dollar index to complete like its flag pattern towards the 94.50, maybe 95 level, because this is the big COVID breakdown point. I'm thinking that's what's going to happen, but it's really early in the week, and it's I think it's going to be more the dollar is going to be more driven by what's happening with yields than anything. As Dale pointed out, yields are pulling back a little bit, but at the end of the week, and it's interesting how Jay Powell or the Fed announced at the end of the week, at the end of the week, announced the SLR exemption to expire, and that's kind of funny how he did that. He's like, hey, he pulled the old kabuki theater. Is that what they call it, Dale? Stelios? The old Japanese.
Yeah.
I haven't heard the expression before myself. Sorry.
Or sleight of hand, you do one thing and you do something.
Where it's basically it's the old bait and switch, and or a nice little magic trick, if you will, where he's like, oh, focus on me, and focus on what I'm doing with what I'm saying here, but don't even worry about what I'm doing with forecasts to GDP. Don't worry about what I'm going to do with the SLR, which when he got asked what's going to be the decision on SLR, oh, we'll have a decision in a few days, but let's talk about how dovish I am about the economy. And so what that did is basically pushed everybody else off during the Fed meeting, and they made the announcement late in the day on Friday, and the market had very limited response. And it had limited response because most people were packing it up for the weekend. They're done. The market was pretty much finished. And so now I think that yields are, as I pointed out, I think on the week ahead video, I think they are going to pull back a little bit, but overall I still think yields are going higher. And that's why I believe that the dollar is going higher as well. So I'm using these opportunities, especially if you take currencies like the Aussie dollar. I think the Aussie is currently in development, and most of you guys, especially if you listen here throughout the week, I'm looking for a head and shoulder to develop in the Aussie. And I think we're going to be trading probably closer to the 71, 72, 74 cent range, somewhere in this neighborhood in the next couple months, which will give us an opportunity to be long at lower levels. Because I do believe that the Aussie dollar is probably going to 80 by the end of the year, or back to 80 or above 80 by the end of the year. So this is just going to be an opportunity to get long these at better prices. So anyway, that's my 2 cents about the FX market right now. Obviously, when you guys, if you're a Forex Analytics subscriber, you're going to be able to listen to, you know, my analysis of all the major currencies here in about less than an hour from now. So I'll see you on the morning edge. And I got to mention one last thing, guys. If you enjoy what we're doing here during the FACE webinars, Dale's interviews, Dale, you got a great interview today, right?
Every day.
I know you have a great one every day, and I'm excited on Thursday. You're going to bring Chicago girl Tracy back.
Yeah, Tracy will be back, right?
Yeah, so it'll be nice to have Tracy back. She's awesome. I just wanted to mention, if you guys like what we do here, make sure you visit our sponsor, which is Pepperstone Securities. They're one of the larger FX brokers in the world, and we're partnered up with them. But if you want to get Forex Analytics for free for a few months, open an account here if you're outside the US or Canada. If you're in the United States or Canada, visit Forest Park FX. They're like the concierge of currency traders finding you a broker. So Forest Park FX is one of our sponsors too. And I'm going to pass it over to Stelios and back over to Steve here. So good morning, gentlemen.
Good morning.
Morning.
So we heard Steve's take on Turkey.
Yeah.
So are you guys going to invade? I'm just asking for a friend, since you guys are in Greece. I mean, are you guys going
we
over
can't
there?
invade anybody. One thing which I found quite funny is that the successor to Naji Akbal, or whatever the name was, the person who got fired, apparently has expressed support that high interest rates cause inflation. As supposed to be a banking professor. Yeah, I would really
So
like
he
to
knows
hear,
his economics.
I'd love to hear the arguments for that. But anyway, you know, this is what I read. I don't know the person, obviously, but I read about that. So
High rates cause inflation. Very interesting. Okay.
yeah, I mean, you bring rates up. Nobody wants to save, right? Nobody wants to put money away.
Yes,
of course.
yes,
course.
absolutely.
Yeah. Anyway.
Well, it sounds
Totally makes sense.
Sounds like you guys over in your neck of the woods are going to have your hands full. So, congratulations.
Okay.
Anyway,
right.
well, I'm going to pass it over to you guys, and you guys have a great trading day. For the rest of you in the Forex Analytics community, I'll see you in about an hour's time.
Thank you,
Thank
Blake.
you, Blake. Thank you.
Thanks, Blake.
So it's been all about the lira overnight.
Yeah, quite
But
a massive
really,
one.
yeah, it's, you know, it is.
I think
big,
there
but-
was something on the social side of things, some type of pact or something regarding domestic violence in Turkey as well, that they're opting out of something that guaranteed women more rights, and, you know, not, you know, they're
I don't know. I didn't hear. I'm
okay.
not-
And that was something I heard on the news, saw going across the crawl. So
Yeah.
anyway,
Yeah.
he
Okay.
certainly
Good luck
is
to
a
them.
strong man, isn't he? Yeah.
Yes, definitely. Okay. What else? I mean, there's been very little otherwise. I mean, the main thing that remains obviously COVID and how this is going to develop, and the vaccines. And I was reading about the AstraZeneca vaccine, which apparently might have some side effects or could have some side effects. But I was reading that it seems that it's 100% effective to protect from death and the severe disease, which is, if true, that's fantastic. You know, it's like, I was talking to a friend of mine who goes into hospitals quite a bit. She's not a doctor, but she's in the profession, and she says, look, there's people who have had both shots and still get it. But the whole point is that if you get the shot, you go through
Exactly.
it very, very lightly, let's say. So if
Exactly.
this vaccine can prevent death and, you know, severe symptoms, then that's great result. Great result.
Yeah, that's supposedly all we care about, because if it was just about getting infected from a virus, then every fall and winter we should be closed down because of the flu and
yeah, exactly,
everything else, right?
Exactly. Hopefully this will be just another, just like people said in the beginning, oh, it's just a flu. Hopefully it will become just
It will become, yes,
Yeah.
with vaccines and and longer term medication, as we've said, it will become something equivalent to the flu.
Yes, and so I think the AstraZeneca vaccine, I think it's been now approved in the US, and I have to read up again. It's very difficult to keep track of all these things. One country says we don't want it, the other one says yes, we want it. It's a bit.
As I've said, if anybody has an extra one and they don't want to use it, I'll take it off your hands very cheaply.
Yes.
When are you guys going to be able to get it?
Me sooner than would be the case, because I'm now added in the group of
because you
high
had
risk.
yeah,
Well, not high risk, but higher risk.
yeah, which is kind of funny because I think the only risk factor that has changed is me getting thrombosis, but with antithrombotic medication, that chance is 0.
Yeah.
So, but whatever. I mean, I'll take it. You know what I mean?
Yeah.
If they want to put me there, I'll take it.
Yeah. Anyway, I don't have much else to say. Metals is the only asset really moving today. Lower, yes, and currencies a little bit here and there. Nothing.
Yeah, I mean, both gold and silver found resistance at the obvious resistance areas. Here is gold finding resistance at this confluence around 1750. It's not that it has broken down. So far, it's been consolidating there for 4 days. And here is silver getting rejected from backtesting this channel and this horizontal support resistance area at 2625. So, that leaves them vulnerable to potentially more downside in the short term, because nothing has changed in my assumption about the longer term. And here is platinum, which got rejected from its channel, so that also leaves open the possibility of a lower low within the channel, so a little bit of a more complex correction before we can continue higher. But other than that, I don't think anything has changed. I don't believe anything has changed in the outlook for both. I'm more interested to see what's going to happen here with crude oil. Crude oil broke down on Thursday, down below this channel. On Friday, it pushed back within the channel. We have this horizontal support area, like 57.50, call it roughly. So I want to see what exactly is going to happen from there. I think it's very important from the trend. We break below 57.50. I think that we're going to find ourselves down to 54, which is the next downside area, very, very fast. And I think we open, the possibility of much bigger losses, in part of a correction that's, that we've been looking for a long period of time. I mean, it's well overdue. I mean, at some point we went from like 11 in the continuous, all the way up to the high, which was at 68 or almost 68. So yeah, a move from 11 to 68, I think is, at some point due for a proper correction. I hope we get this now, because my thesis here hasn't changed either, which means I believe that crude oil is going to be headed higher. I just didn't have the opportunity because there was no proper pullback to buy it at the price that I consider appealing. So I hope that this corrective move, gives us, better levels to start scaling in for another leg higher, as I think all commodities are going to have another leg higher. Coach?
Hey, yes.
Is your guest here?
Yep.
Okay, perfect.
Awesome.
Then,
Okay.
We'll talk about the rest in 45 minutes.
Okay.
Thank you,
Enjoy the
Steve. Thank you,
interview.
Coach.
Thank you, guys. Okay, Dom, I'm going to get you set up. Promoting you to panelist. Welcome to Face, Dom. Waiting to hear your voice, your microphone. Did you choose the mic?
I did. Hi, Dale. Can you hear me?
Yes, Dom. Pleasure to meet you.
Pleasure to meet you, sir, as well. Thank you for having me. I appreciate it.
Yeah, appreciate you taking time out of your trading day to address us. Have you used Zoom before?
Do you know what? I think I have once about 3 months ago. So
Okay.
I was a bit slow looking at the meeting. I was hearing the kind of the other panelist earlier. So
Okay. Well, there's a green box that says share screen when we get to talking
Yeah.
about the markets.
yeah, got you. Yeah,
So
yeah,
you could
I
go ahead and
found that.
share when you're ready.
Yeah.
You're going to share your screen?
Do you want me to do it now? Or
Yeah,
do
we
we
could do it now. We
Okay.
could do it right now while we're talking.
Yeah.
And I'd like to start off with perhaps you telling us about your background and your journey and how you ended up being a trader.
Yeah, sure.
You know,
Sure.
where were you? Was this something you always wanted to do? Was it an accident? How did it happen for you?
It was kind of interesting. I funny enough was discussing this with some of my my members last week actually, and so I was about 12 years old, and my father used to. I'm basically British. I live in London, and I was 12 years old, and my dad used to buy the national newspaper called the Daily Telegraph, and at the back of the Daily Telegraph was a list of 100 shares, the FTSE 100. And
Right.
so I used to kind of read it, and I used to see the numbers going up and down and stuff like this. And occasionally I would pick a share and just follow it. And that was when I was 12, and that kind of got me interested in it. And then I left school early. I left school at 16, and I joined retail banking. And I started off putting checks through machines and stamping people's money in and out and all this stuff.
Wow.
And yeah, that was on the that was a long time ago, and kind of the early 90s. So yeah, that was 16.
Did you have to do that, or you were just tired of school?
I was just tired of school. I just didn't really, enjoy school that much. Really, didn't want to go to college. Didn't want to go to university.
Okay.
And
you wanted to make money.
Yeah, and it was good money then. You leave school. I think within 2 weeks I got a job, which I was earning about, I don't know, $1,200 a month, which at the time was, made me the kind of richest 16-year-old amongst my friends. And that's what I did. I just found,
you were the first one to have a car.
Yeah, exactly. Had the car. And
had the girls.
Yeah, it all seemed great at the time. And then being in banking, obviously, I don't know, I just kind of gravitated to, again, the not trading, but looking at stocks and shares and getting involved with that. They had a kind of a securities element, and so I would kind of register people's shares and certificates and stuff like this. And I decided to, at 17, do the what's called at the time it's called the Securities and Futures Authorities exam. So it's like a bit like the American Series 7.
Okay.
And so I did that, and at the time, so I passed that on my 18th birthday. So I think I was the youngest person in the UK to be a fully qualified kind of stockbroker and could advise clients on stocks.
Wow.
And there was 3 components to it. There was stocks, and there was futures, and there was options. And there was also commodities, but I think that came under futures.
One of our attendees is making a comment about how clean your chart looks, and they wonder, is that your trading platform, or is that a charting service that we're looking at?
So it's a charting service that comes with my platform. Okay. I use a company called IG, based in the UK. It's kind of it's a spread betting firm. I use that for tax purposes. Okay. And the charting package, I think you can buy separately. It's called Pro Real Time. And
Pro Real Time from IG ForexScale. Okay.
Yeah, exactly. But you can get it. I think you can get the charting package separately. You don't have to go via IG. If you go via IG, it's free. So
okay.
So
thank you.
Yeah. And I like to keep my charts relatively clean. They can get messy, but when you said what am I looking at the moment, I just wanted to give an overall picture of the ES and I like to keep things really simple.
So you use RSI for momentum. That's my only tool that I use for momentum is RSI. Yeah. Do you use it for Just knowing when a market's overbought, oversold, are you looking for divergences? Are you looking for confirmed highs and lows?
Yeah, I use it for all of the above, really. I'd like
Okay.
to know when it's kind of overbought or oversold, right? You know,
Mhm,
you can
yeah.
see on my, here when it was oversold, and obviously you got this big green candle here, right?
Yeah.
It gives me an idea of potentially where the market can turn. And then obviously I look at divergences, and sometimes I'll be drawing sort of like trend lines. I'm just going to do one here, something like this, and see
Oh,
if they're
okay.
broken up, and I like to kind of just chart the RSI sometimes. You can see there, look, it's come back, it's bounced at this trend line, and I find that quite useful as well. Just it's it's an input into a decision. I don't generally trade when I'm trading intraday. I won't trade off of the daily chart. I just want to know where everything is, right? So if it
Okay.
gets there, where are the big important levels on the board, right? I think it's really important as a day trader. We know that, and
So what do you think about the big round number 4,000? We're going to take that out first before we correct.
I don't. I don't try and forecast where it's going.
Okay.
Because for me, when it gets to these big levels, more
Yeah.
than often than not, it doesn't get there first attempt. And what I'm showing you here is this is the March low, right? This is the 2020
Yeah.
March low, 2174, right? And if I expand it out, we came back in October pre-election, we touched that trend line. We touched it in Feb. We
Yeah.
went through it at the beginning of March, and we're right here, right? We're simply
Yeah.
right here. And as I say to my guys in the room, if this breaks, it's game over, right?
Yeah.
That's what we're in a downtrend or in a tracement. I'm not saying we're in a bear market, but we could come in, we could touch 3,800, 3,700, 3,600, whatever. We could drill down, but ultimately, I'm just watching this line. If it stays above it, and I can see daily candles of like hammers, and we're touching it and they're still buying interest, then 4,000 is definitely on the cards. It's a big round number. I know there's lots of options, the call options that are kind of pointing that way. But, if it gets 4,000, great. If it gets to 5,000, great. If it gets to 2,000, great. I try and trade when I think the market has fundamentally changed. Right.
And you try and be there based upon your handle and the name of your business at an inflection point. So
Yeah.
you think we could be at an inflection point right here, right?
Absolutely. And I think we are definitely at an inflection point. We break these 3875s, and first step will be 3892, and then 3875. Then we'll be selling the rallies, right, as opposed to buying the dips. Okay.
Okay.
So that's really what I think.
Okay. Are you pretty much self-taught, Dom, or did you have any influences in your career that books or mentors, or was it all just get in there, dig your heels in and just learn from doing?
It's a bit of both, really. I think right at the beginning, because basically how I got into this industry, because I've completed my stockbroking exams, I ended up going onto the live floor. So I was on Open Outcry, very much like your CME, CBOT.
Yeah.
It was huge at the time. It was up to like 4,000 people running around, and it was
Yeah.
great. So, but that was a completely different. You didn't really have charting packages. You didn't, you had your kind of pivots and stuff like that, and it was a whole different ballgame.
Did guys do? I was on the floor as well. Did a lot of guys did point and figure on index cards and so forth, right?
Yeah.
They did that on life too.
Yeah, you had
X's
that.
and O's. Yeah.
Yeah, exactly. And I think what is people always say, oh, it's great being on the floor, but you had access to a whole lot more information, and I think there was a camaraderie there where essentially the traders looked after themselves, right? I mean, yeah, if you sometimes you got hurt by fellow traders, but ultimately they were there to support you. And I think, you know,
You ever have out trades?
you knew where the volumes were, you knew where the stops were,
Right.
you know, and so it made life somewhat easier.
Mhm.
Whereas now we hide behind screens, you know, it's all anonymous, and you know, yes, you can look at the order flow and you can look at the DOM, but you know, I still think that's, you know, there's a lot of bids and offers that get pulled there, put it that way, and so I think the anonymity makes life somewhat more difficult than it was on the floor, and then graduating from the floor and obviously trading evolving and charting packages and different
Yeah, a
kind
lot of guys
themes.
had a hard time making the transition because they were basically trading off of paper. They didn't have to be directional or, you know how to set up a trade.
Yeah,
They just
absolutely.
went
Yeah.
in, and so a lot of people could, some were able to reinvent themselves, and some, that was the end of their career when the floors closed.
I would say about 80%, maybe even higher, was the end of their career. You know, and they either went into broking, right, which
Yeah.
you know is some form of arbitrage. Quite a lot of them, when life went, they went to you know, trade commodities on the oil exchange in London.
Mm-hmm.
Because it was still open outcry and they could leverage off that paper, like you say.
Yeah.
And a lot of the accounts, you know, a lot of the guys, you know, they were employed by big firms, but they had their own PA, personal account. So, you know, and they would just cross up, right? You know, so the market was trading 56s, you know, they'd buy and sell 54 or 58s and cross it against 56 and make the 2 points, right, in their own account. So the client got a worse deal, but, you know, they made a few bucks. And that was how many of them made it. And of course, they, you know, that wasn't really trading. That was just, you know, kind of an arbitrage opportunity on price and the client paying for it. And, you know, once it went fully automated electronically, that just couldn't happen anymore. So, so I think a lot of people left it, like I say, 80, probably 85%. And then it's just been an you know, evolution of charting packages and learning.
Yeah.
And you know, one of the guys I do like is Mark Douglas. I think he really kind of you know, started the whole, I would say, psychological and emotional component of trading. I really like him. And then, you know, now and again I go back and watch him his really old and dodgy videos that he made. But I think his principles, you know, are sound.
Trading in the zone.
Yeah.
Let me ask you this, Tom. Do you think that the dollar is really kind of the fulcrum of the wheel that all other asset classes and instruments spin around, the value of the dollar? And if you do believe that, you have a view on what's happening in the dollar recently, it's having a tried to, you know, it's trying to bottom here. We've had at least one higher low after the low was 89.20. Then we rallied, held 89.70. Do you have a dollar view, especially against cable since you live there?
Yeah, well, I mean, cable has its own kind of issue with Brexit and the European Union, and it's kind of broken out, obviously, at that kind of 134 level, and raced pretty quickly up to 140. I think with the dollar, we're an interesting, you know, again, inflection point. I mean, you know, a lot of people were saying,
a chart of it? You have a chart of it?
I will get it up for you, but I think
Okay.
just bear with me, right? So
Okay.
I think the interesting thing about the dollar was, you know, a lot of people were saying, okay, you know, it's going to on the Dixie, it's going to like, you know, 85, 70, and
Right.
because of all the printing and stuff
Right.
like that, you know, it's going to be devalued. And I think one of the issues I have with that is that whatever happens in the world, there's always at some stage a flight to safety, and that always means that it goes to the dollar, right? So, you know, it's the world reserve currency, and it's an important component to, like you say, a lot of things, right? You know, I mean, you can chart every time the dollar goes higher, you know, the S&P will come off, right? And vice versa, right? A weaker dollar
Right.
is good for US stocks. And then you've got the correlation between obviously dollar and gold. And a lot of people have been saying, particularly around 89.20 and the 89 area, you know, that it was getting weaker and weaker. And I was saying, well, actually, if you look at it, I'm just trying to put up my charts. It was in a declining wedge, and at some
Yeah.
point that wedge was going to break out. Let me just 2 seconds.
All you have to do is, just bring up a different chart on this screen. Otherwise, you stop the share and then start a new
Yeah,
share.
exactly. Okay, just see if I can change security here. So, all right, so I'm looking at the screen rather than the chart.
Okay, so that's still S&Ps.
Yeah, 1 minute, sorry, apologies.
It's okay. Next time you'll be ready to
Yeah,
maybe talk about a few different things instead of just one instrument. So if you're having some trouble with this, maybe you want to talk about your business model.
yeah, 2 seconds. No, I'll bring it up. I think,
Okay.
so can you see the?
Yeah, it's underneath it. Is
Yeah.
that what you're showing? The little, little blue and gray, just a comparison chart with, dollar getting weaker with the S&Ps going up, but it's a
No,
real
just,
small grid.
Can you, I've got it to the full screen now. Is it on? It's on the screen because I think.
No, okay.
Oh.
Because it's showing underneath the S&Ps is where the dollar is right now. You see that?
Yeah. Okay. I don't think I can change share. I'm struggling. Okay, I'm sorry.
Okay, you'd have to stop sharing and go to another one. So
can I do that? Or no, you don't want me to do that.
You can do that. Sure.
Okay.
We have time.
Can you see the dollar now?
No.
Where
would you say your trend line? Okay, now we have it.
Yeah, so I'm going to delete the Bollinger's. I like to have Bollinger's on my stuff as well, just to give an idea of what's going on.
I just was curious where that trend line would break on the S&Ps ballpark.
It's 38.92.
38.92 breaks your uptrend. Okay.
Yeah.
Thanks.
So I was saying the dollar. I'm just going to draw this roughly, but the dollar had this kind of declining wedge here, right? And it's quite kind of steep, and something like that, and then basically it broke out, and then it came down, and then like say around the 89 mark, I was like, well, it can't continue here. At some point, it's going to break out, and actually, you had a nice morning start pattern there, right down, doji, back up, and then on the daily, you've got a series of trend lines that are pretty much held, and then it broke through rather recently, and now it's come back up above. And I imagine that 92.47 would be some form of fib between the 89s and the 95s. It's probably a 50 back fib. And I think,
what's that blue line right there that you're pointing at?
This is this blue line here, the dot dash one.
No, the solid one underneath.
So that's my Ichimoku. I use Ichimoku again.
Okay.
So,
all right.
So it's funny because the guy was saying, my charts are relatively clean. I clean them up for show. Yeah, I clean them up for show because I'd like to, because if you have Bollinger Bands on top of this, on top of Ichimoku, it can look really messy. But once you get used to it and understand that essentially they're moving averages and standard deviation, you can quickly glimpse. For me, is about whether something is what I call in the middle. With an RSI of 50, it's hitting the middle band. Rather than what I really like to kind of trade as well when something's at the edge, which is oversold or overbought, or knowing that something is essentially exhausted, right? And looking for kind of, not necessarily looking for tops and bottoms, but just knowing where kind of max resistance or max support is. And just going back to the dollar, I just think, my fundamental principle of the dollar getting weaker is that can't work, I think, with rates going higher, right? So there's a kind of contradiction in that, right? Because if rates are going higher, people are going to invest in dollar assets, particularly U.S. Treasuries or whatever, and so therefore the dollar should get stronger. So I think it's really difficult to turn around and say, okay, long term, yes, there's a debasement of the dollar, and it's going to get weaker and weaker and weaker because they're printing and printing and printing. But if you look around you, the ECB has been doing it for years.
Yeah. So you're like, could I say you're constructive the dollar?
I'm what? Sorry.
Constructive.
Yeah, I just don't see a.
You're not
massive,
long.
No,
yeah.
I was long at 89,
Mm-hmm.
I'm not long or short now. I think
Okay.
I think it's in the middle, and I think the most important thing at the moment is rates. Where are rates going? Are they going higher? Is it the new norm that we're going to see a movement in rates? Because the higher the rates, for me, that would be supportive of dollar.
Okay.
So I think, but that doesn't necessarily mean I think it's going back to 100. You know what I mean? It just means that.
How about 97?
Yeah, 97 is doable, easy. Yeah.
Okay.
Yeah.
All
I mean,
right.
I'd be playing the fibs, right? I'd just be playing the fib between.
I like the confluence at your Ichimoku right there, the blue and the red dotted line confluence there.
Yeah.
It kind of look like a little ABC if it pulls back there.
Yeah.
Anyway, nice looking chart. So, you misrepresented yourself as a naked trader, and I see you with a lot, a lot. This is not trading naked. This is trading with your battle dress on. So,
yeah. I mean,
yeah. All right.
Yeah. When I generally trade off. So what I tell my guys is know the big picture.
Yeah.
Know where you'll get, what could happen, right? What could happen. And then, I generally trade off, the 5-minute chart. So, I have all this information here, and all this is telling me, Ichimoku is just essentially a bunch of moving averages, right? So, and then the dashed blue line here, is the 5 SMA. This dashed lighter blue line is the 200 SMA, right? And so I can just gauge. For me, it's about, is the market strong? Is it weak? Is it, are there confluences around? So like for instance, you've got a trend line from the bottom here, right? Follow the trend line. It held there, right? It held there. It broke there. It found support here. We touched it here. If we come up here back into this 92.43 area, it's a double top. It's probably going to be resistance, right? So, I just need to know this when I'm trading, and that's for me, like I say, my business model is in terms of inflection points and trying to be on the right side of the inflection points, right? Even if you're on the wrong side, you're in a relatively safe area, right?
Yeah.
Because
So
if it does break, go on, sorry.
Yeah. So if we get that 92 close over there, I'd say it's a pretty high probability that the S&Ps will break down under 38.92.
Yeah.
Don't you? Yeah, probably
absolutely.
sooner than that. But
yeah.
All right. So I'm thinking the dollar moves sideways, so the S&Ps could get above 4,000, but we'll see. Kind of looks like it's having trouble closing over 92 right now. Do you want to show your website and the best way for people to follow you, Dom, is on Twitter, or how do you want to do this? What's the best way for people to follow you?
Just
Twitter?
let me just put up. It is on Twitter. I have a Discord room.
Okay.
And so I'll just kind of probably explain, why I'm around and what I do. Can you see my Trade Inflection website?
No, but I could show it. There, let me take it from you.
Should come out. Oh, resume share. I have to press resume after.
Yeah,
There.
okay, there you go.
There you go. So,
There.
so the reason, the reason I got on Twitter was, it was just a friend of mine. He said, "Oh, you should look at Twitter. There's got this whole FinTwit thing going on," and this was about sort of like 3-4 years ago, and I never used it. I just traded for myself, and I didn't even have Twitter on my app, on my phone. Sorry, and I started looking into it, and I started. I worked out that you could follow people who did the ES and various products and instruments and stuff like this. And what amazed me, for me, the most important thing is in trading is not the levels, right? Because if you know how to read a chart, and if you look at kind of order flow and various different techniques, you know where the levels are, right? So I've just given you, for instance, a chart of the ES, and it says, here's the trend line from the March lows. It comes in about 3892. If it closes below there, then we're looking to sell rallies, and we're looking for weakness. And if it stays above that, it's continuation of trend. And I used to get very frustrated with people on Twitter, because for me, if I'm going to give you my advice, and I'm going to give you the knowledge that I have, it's got to be in real time. And there was no one doing it, and there still isn't people doing it in real time. So I kind of said to my followers, as it were, look, guys, anyone can say, I'm going to flip a coin. It's either going to be heads or it's going to be tails, and can come back an hour later when the coin's flipped and say, look, I told you so. It was tails. I told you so. It was heads. And I find that this either or kind of option in Twitter, and then coming back 2 hours later or an hour later when it's hit price is just I don't think giving anyone value. And so what I try to do is and I have done is created it all in real time. So for instance, if it's trading, like last night it opened, and I said, look guys, the level is 87. We'll go long at 87. We went long at 87. We got out at 98. We made 11 points. And people, I think, need the knowledge at that moment in time. So if the market's trading 50, I will just press out. I have my own Discord channel, and I can just say long setup, buy 50, stop 46, target 60, and then that goes onto my Twitter account at Trade Inflection. There's a 5-minute delay, and then if they pay me, to join the subscription, you can get it on Twitter, or you go via Discord, etc. And so for me, I think that is the most valuable point. If people are gonna follow you and people are gonna learn from you, you've got to do it in real time, because anyone can do it in hindsight. That's just the easiest model out there. And so,
you know what I think is even more valuable is when you can call a trade before it happens and have your entry already planned ahead. I mean, my best trades are made on the planned on the weekend.
Yeah, absolutely.
When the markets are closed. So there's a lot of times you have to, you're executing, and maybe it's something you didn't plan on the weekend, but I know coming into the week where and what I want to do. And then all I have to do is execute. So I think actually giving people a heads up on where's a good entry instead of we're doing it right now.
No,
prepares
absolutely.
people for it. So
No,
that's what makes the market.
Yeah, sorry, Karen.
That's okay. That's what makes, everyone has their own style. And I believe preparation is the most important thing. And what prevents impulse trading from me is having a plan beforehand.
Yeah, absolutely. So I mean,
right, buddy?
I do a weekly video, just giving kind of the high level inflection points. So for instance, this week 3892. If we're below that 3875, then what I say is we're singing a different tune. We're going down. If we're above 913 and 935, then we're looking to go to the highs and potentially 4,000. Okay. And then on my Discord channel, I have a voice channel, right? So I'm on it constantly. So I will prepare the guys to say, look, guys, if it gets to 07, we're going in. If it gets to 15, we're going in, right? Okay. So they're ready. And then bang, I'll go, right? So, and then obviously I'm putting up charts during the day and stuff like that. And saying, look, this is why I took this trade, right? It's the third time we touched it on the trend line. It's the 50 back of the move. we're going up. It's a trend day to the upside. We're going in,
Okay.
you know. So and then, you know, and that's as I teach people as well. It's the same approach, right? And
You know what
I get a lot
happens
of
when
traction.
you survive an interview with me, with Dale Pinker, coach?
No,
You become my trading warrior brother for life.
that's good.
You'll
That's
accept
good.
that? Okay, you'll
Yeah,
accept
good.
it.
I accept
All
that.
right, bro.
Yeah, definitely.
All right. So I want to thank you, Dom, for your time, and
Yeah.
like to have you back. And
Yeah,
maybe
definitely.
you'll have the hang of changing more charts, or kind of come in.
Absolutely. I mean, just if you give me kind of, you know, now I know the process, and if you want me to kind of give you an overview, I'll do like
Yeah.
say a weekly video, and I can expand on that, and we can go into kind of potentially more
Okay.
products and stuff like that. But like I said,
Okay.
it's the first time I didn't know how this would pan out, but
You did great.
yeah, I
You
appreciate your
did
time.
great. You did great. And you know what? I hope every inflection point that you see goes your way for you and your community.
Yeah, good. Good.
All right, buddy?
All right, good to talk
Or
to
as you
Dom.
say, mate.
Mate, yeah, exactly.
Right?
Yeah, exactly.
All right, everyone. Thank
mate.
Dom for his time, and you know where to follow him at Trade Inflection. And Dom is a pro, and he had lots of money and girlfriends at 16, and and a nice car, and he probably has more money and less girlfriends now.
I was going to
Just
say, yeah.
Huh?
I had it all at 16, lost it all at 21, and then came back.
All right, man.
Okay.
So Dom, I appreciate it, buddy. Have a great trading day,
And
and
you.
I appreciate getting to know you.
Take care. Thanks,
All
Dale.
right. All right, everyone. So that's a wrap. Remember, don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. The Morning Edge starts in 14 minutes. Adios, everyone.